Hi friends, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's video, we are going to solve an example of income from house property. This example was asked in SPPU examination October 2022. Subject is Auditing and Taxation Semester 6. So without wasting time, let's start solving the example of income from house property. So this is the example on the screen. The example is compute income from house property of Mr. Sharma for the assessment year 2022-2023 from the following particulars. So these are the particulars. Municipal value is given 90,000. Fair rent is given 92,500. Standard rent is given 87,500. Annual rent is given 84,000. Unrealized rent is 21,000. Vacancy period means the house was vacant for 1 month. Municipal tax is also paid and it is 15%. Then interest on loan 17,500. So on the basis of this information, we have to calculate the taxable income from house property for Mr. Sharma. Now, in my last lectures, I have explained you the steps to calculate income from house property. So these are the total 4 steps. In these 4 steps, we have to compute the income from house property. So give the heading computation of income from house property of Mr. Sharma for the assessment year 2022-2023. Now, first step in calculation of income from house property is to find the reasonable expected rent. That is what RER, reasonable expected rent. Now to find reasonable expected rent is, first we have to find the maximum from municipal valuation and fair rent. Okay. Now how much is municipal value? 90,000. So in municipal valuation write 90,000. Second, fair rent is given 92,500. 92,500. Now from these two values, that is what 90,000 is of municipal value and 92,500 is fair rent. From these two value, we have to find the maximum amount. So maximum amount is fair rent. Fair rent is how much? 92,500. So write 92,500. Now next is what? Find the minimum of the following. Minimum of the following means what? From maximum amount and from standard rent. Now what is maximum amount? Maximum amount is fair rent. So how much is maximum amount? 92,500. Okay. Now how much is standard rent? Standard rent is given in the question. The standard rent is 87,500. 87,500. 87,500. Clear? Now see. For reasonable expected rent, first we took the value of municipal value, then fair rent. From municipal value and fair rent, whichever amount is higher, we have taken it as maximum amount. So maximum amount is what? Fair rent, 92,500. From this, we have to find the minimum. So maximum amount and standard rent. Standard rent is how much? 87,500. Two value which is minimum. Minimum is standard rent. So standard rent is 87,500. So 87,500 is the reasonable expected rent. Okay, so this is the step 1. We got RER. The RER value is 87,500. Clear? So step 1 we did, we got it. Now step number 2 is what? The step number 2 is to find the rent received or rent receivable. So how to find rent received or receivable? We have to find it by adjusted annual rent. Now how to find adjusted annual rent? Annual rent minus unrealized rent. Now how much is annual rent in the question? Annual rent is 87,000. Annual rent is 84,000. Okay, 84,000 is annual rent. And next is what? Unrealized rent. Unrealized rent is what? The rent which is not paid by the tenant to the owner. So unrealized rent is 21,000. Annual rent is 84,000 and unrealized rent is 21,000. So how to find adjusted annual rent? Annual rent minus unrealized rent. Annual rent is given in the question 84,000 and unrealized rent is given 21,000. So 84,000 minus 21,000, we get 63,000. So 63,000 is the adjusted annual rent. Okay, so rent received or receivable is how much? 63,000. Rent received or receivable amount is 63,000. Okay, so step 2 we did. Step 2 how much is? The value of step 2, that is what? Rent received or receivable is 63,000. Now step 3. Step 3 is what? Compare step 1 and step 2. Compare what? Step 1 and step 2. From step 1 and step 2, we have to compare the value whichever is more or higher. So step 1 value is 87,500 and step 2 value is 63,000. So which is greater? 87,500 is the greater value. So write 87,500. Okay. Now from this step 3, 87,500, we have to less the loss due to vacancy. Okay, that will be a step 4. So step 4 is what? Reduce means less the value of the loss which has occurred due to vacancy. So in the question, the vacancy period means the house was vacant for 1 month. Okay. So what will be the 1 month rent? See, annual rent is how much? In 1 year, how many months are there? 12 months. So for 12 months, the the house rent was 84,000. Okay. So for 1 month, how much? So 84,000 divided by 12. So 7,000 is the rent for 1 month. So for 1 month the house was vacant. So 7,000 was the loss. Okay. So 87,500 minus 7,000. How did I got this 7,000? See, the house was vacant for how much? 1 month. Okay. So for 1 month, what will be the rent of the house? Annual rent is 84,000 divided by 12. So for 1 month the rent is 7,000. So 7,000 is the loss occurred due to the vacant house. So now from step 3 less step 4, the value will be 87,500 minus 7,000. 80,500. Okay, we got 80,500. This 80,500 is a gross annual value. Okay, now from this gross annual value less municipal tax. Okay, see in the question municipal tax is given. How much is the municipal tax? 15%, and this 15% of tax is paid by the owner. Okay, so we have to reduce it from the gross annual value. So 15% of gross annual value. So gross annual value is how much? 80,500. 15% of 80,500. The value will be 80,500 multiplied by 15%. 12,075 rupees is the municipal tax. 12,075 rupees is the municipal tax. Now from gross annual value less municipal tax, that is 80,500 minus 12,075, we will get the net annual value. So 80,500 minus 12,075, we get 68,425. So 68,425 is our net annual value. From net annual value we have to do the deduction as per section 24. Okay, so less deduction under section 24. So standard deduction compulsory we have to do as per section 24 subsection A. So standard deduction is how much? 30% of NAV. 30% of NAV means what? 30% of net annual value. So how much we got net annual value? 68,425. This is a net annual value. So 30% on 68,425, we get 1,527.5. Okay, I will show you the calculation. 30%, 20,527.5 is the standard deduction. Okay, from that less interest borrowed capital or interest on loan. Check the question. Is there any interest on loan? Yes. So interest on loan is how much? 17,500. So less 17,500. Okay. So now from net annual value we have to minus 20,527.5 and 17,500. So total we get 68,425 minus 20,527.5 minus 17,500. Total we get 30,397. So 30,397.5 is the total taxable amount for income from house property. So 30,397.5 197.5. So this is our income from house property. This is our answer. Okay, so hope you have understood this example, how to solve income from house property. So I hope you have understood this example, and this is the correct answer for this example. Thank you very much. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon to get the latest notification.